All right, I've welcome back for the episode of Carnivore Trades. Today is Friday, May 26, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it here today. So I'll try and wrap this up for you quick. I know it's Friday. Everybody wants to get out, go to Memorial Day weekend. And that's kind of what the market looked like today, right? We had a nice gap up and then really just chugged higher all day long. Looks like they turned the algos on for sure. Buy program, look at 1, 2, 3, 4, 5, 6, 7, 8, 9. First 90 minutes of the day for triple Qs, green. All green there. And look how tight that range is. You know, you get this sort of thing before holiday weekend, right? The big boys, they don't want to be here. They're probably, a lot of them probably left yesterday. A lot of them on vacation. They're in the Hamptons, right? So they're not doing this. They turn the buy programs on and let the interns and the underlings kind of oversee things for the weekend. To me, man, on the Qs here, this looks like bear capitulation though. And there's the SPX, but we're at 348.50 basically. And we're up about 6% in the last 2 days. So, and I think we're up over 10% in the last, 315 to 348. Yeah. So that's, wow. 11.1% in the last, month, or no, not even month. So since May 4th, and a lot more than that since the 25th. To me, it looks like bear capitulation, just straight up vertical move. And I want to show you guys something here. We got to roll the tape back. Market set to close in about 30 seconds here, but I want to show you something here. And this happened we got all the way back to 2000. And you can see here, from the all-time high to the low, we hit a perfect 618, and then we ended up backing off, and then we had a kind of double top, and then that ended up being the big leg down. So that's interesting. What's more interesting too is, if we look at the Qs again, we'll go, there's the closing bell. Try to get it accurate. There we go. So all-time high to that bear market low. We rallied all the way above the 618, and we had kind of an interesting little like double top, slightly higher high double top, just like the one in 2000 I just showed you. And then the biggest leg down came. And I guess you can figure out where we are today, right? So just under that 618 there, very close. And I don't know if you want to make a case that this was like that other pierce or other pivot that we pierced, because in both cases we had kind of a double top there. It's possible to make that case. I mean, this is a little extended from that, but either way, I think that's where it wants to go right now, which is, it's basically there. You're looking at 350. There's also a gap at 349.15. I don't think got filled. It did get filled. Take that back. So weekly gap got filled, and you are into the 618 here, and you've gone vertical. Congrats to the bulls, but this is, now you've built no support. Looks to me like I think we'll probably get a debt ceiling, kind of sell the news. That's really, it might even get done over the weekend. Maybe that's why they were able to squeeze it up. These guys know what's going to happen before the news comes out. It's no secret, right? They have inside info, but. Big move up 2.5% on what? Because AI is a thing, I guess. It doesn't change the outlook. We're, in front of a recession, and the stocks that are doing the best right now, the NVIDIAs of the world, the Microsoft, Apple, Meta, Netflix, these are all companies now that have insane valuations in front of a recession. We know that, we don't need to tell you that. But the charts are the charts, and man, you just gotta hand it to them after this big move. To me, it looks like bear capitulation, looks like a blow off here. Look at the semis. They're up 20% here. To 128 to 147, right? It's 20, right? 128, 15.6%. And then since the 27th, they're up, over 20%. On what? So I get AI is a thing, but the internet was a thing in 1999 too. So, and the valuations were just as insane as they are now, especially for NVIDIA, a company of $700 billion market cap, to go add 200 billion in like an hour. It's never happened before, and we're in unprecedented times. But those are the levels I'm watching though on the Qs. So keep an eye on that 618, 350 Pierce should be a target there. The spiders here, So we closed just off the highs at 420, just above 420 there. Let's see if the SPX. Yeah, they finally got a weekly close above 4205. So that's holding up better. And again, obviously the SPX has lagged the NASDAQ. Well, really everything's lagged the NASDAQ, but they still have a potential move here for, about 4250. Let's put on our SPY here. And that's going to be 425 SPY. So I have a target there right in this range. And that's not far above the gap fill. It's not far above this rising wedge kind of trend line. So maybe there's a little bit more upside in the spiders. And, again, that would obviously coincide with a 618 Pierce on the QQQ. Maybe they do a debt deal over the weekend and we gap up. Certainly possible there. But that's what we're looking at for the spiders. And, maybe we finally have enough momentum to get there, right? I mean, we've been trying for weeks now. We kind of have this little kind of micro high or low there. So, maybe it has enough gas to finally get there. But right now, I mean, geez, what a rally here for the market. But do not get complacent here. So I know that, it's obviously been a one-sided trade here. But, look at the VIXY here. This came way off the lows starting around 11 o'clock with the spiders going higher. That's generally a sign that somebody underneath the surface is trying to hedge against this or potentially bet against it. And there's the VIX you can see, which, ended the week green, but came way off the lows here. Well, either way, definitely don't get complacent. This is how downside comes into play. You get a big move, you squeeze everybody out, and then a trapdoor opens because there's no shorts to cover, and there's just no shorts left. So you get nothing but sellers. But anyways, Russell 2000 here participating in the rally, finally up 1.1%, but still not a great chart. Weekly, monthly, daily bear flag, pretty much everything you can call it. Dow getting a bid as well, up 94 basis points, but still off of that key point of control, closed a little bit lower than that, but they did save the 200-day moving average. So, a decent little pop there. Again, I just don't see the upside there for the Dow right now. Just with all these lower highs here, it's definitely been a laggard. Anyways, the semiconductors we talked about, just amazing move here. And you pierce this area, this breakdown area, there is the red bar high and a gap fill at 153, so 153.46, and then the red bar high is let's say 151. So maybe a little bit more upside there, but I mean, geez, like I just said, so what 16%, 15.6% in 2 days. So let's just leave it at that there. But those are the levels. IGV, this is into an interesting level as well, up 2.35. 100-week moving average. January 24th, pivot low. So right there, slight double top pierce. So that's a pretty good level of resistance. And take a look at Oracle today, one of the leading cloud stocks. Double top. And possible little topping tail there, good uptick in volume. Big move in volume yesterday, and then a little bit of an uptick there. So we'll watch that. Again, if the market holds up, it's going to be hard to fight it, but that could be a little bit of a sign there. So definitely Oracle coming in a little bit. But I like those levels there on IGV. Definitely an interesting area. Dow transports here, kind of a lackluster move up, just 10 basis points. Again, I've said it every single day. Lower highs here. You make one more, I don't think this trend line can hold up here. So. But transports, they scratched out again, and we'll leave it at that. Bonds, ZT rolled over. So the contract rollover, but I'm gonna use the actual yield here. And like I said yesterday, this is something the market's ignoring right now, but this is a huge problem. Why is it a problem? Because if this gets above 5%, the Fed has to start hiking again. No, not 25 basis points, like 50, 75. The market is pricing in cuts. Economic data, it does not trump the 2-year yield. That's really all the Fed cares about. We look at the yield curves. We talked about this yesterday. It was starting to normalize, and then look what happened the last 2 days. Started to look like a failed bull flag. 5s and 30s down, 10s and 30s down. Let's look on the 2-year weekly again. What's that? Everybody should know what kind of pattern that is. High 4.534, close 4.568. That's a failed inside bar on the 2-year. So this can go higher. So that's something to watch moving forward. Market doesn't care now, but it will. It will when the Fed has to go back into full hawk mode, because everybody thinks inflation's defeated, but this is telling us otherwise. The 10-year backed off a little bit. down 10 basis points. But the 2-year, again, the curves are inverting, right? 30-year backing off as well. If this consolidates, though, it can go higher. So again, watch yields here. They'll tell you what's going on. And again, I tweeted this yesterday. I know I'm spending a lot of time on this. I said I was going to be quick, but I remember this back in August. Everybody said we were going to new highs. It's over. It's over. And I kept saying, what was the one thing, if you guys have been watching me for a while, the one thing I said, as I said, bonds are calling bullshit. And you see the TLT here started to sell off as we made that last leg up. The TLT's been selling since April. so there's a big divergence here. Maybe they can keep it up a little bit longer, but eventually the bond market will be right. It always is. So anyways, XHB inside pattern here. Let's zoom in. Still a little inside bar. Give that a downside bias to 68 until you get back above that 20 moving average. ITB, same thing. Downside to 72 unless you get back above that red bar that we're inside of. VNQ, getting a bounce on the day, still a weak equity. I don't like it whatsoever, as you guys know. XLF on the softer side today, still up 75 bips, but again, below all the moving averages and really not a good looking weekly pattern here, right? So down move, sideways to up, that's a bear flag. Don't like it. Broker dealers did have a nice day though. So broker dealers had a nice pop. Still below 450, but if this consolidates, maybe it can work its way back to that 200 moving average, maybe 460. KRE actually held up as well, so that was up 1.23. If this consolidates, maybe it can make one more run to 44, but again, there's still a lot of supply here. And from what I'm hearing here, the bank stuff, I don't think anybody would disagree with this, but that's not over yet. Deposits are falling off of a cliff, and that's a huge problem for the smaller banks. But KRA is holding up right now. KBE, same thing. All right, over to crude here. So crude getting a micro bounce here. I still don't love the pattern. This is starting to look more like bearish consolidation, especially on the weekly. All right, so we'll clean up the lines there. You never got back above my level, 82.72. I was just telling my members here in the live stream today. I talked about this level since December, and we never closed above it. Now we're back inside of this channel, so it looks like bear consolidation. I will be a big buyer of crude later this year, but not yet. So that's really what I'm looking at right now. I have no play in it at the moment. No horse in the race. XLE, same thing. I think that needs to go test 70. XOP, probably about 100. That's where I've got good support penciled in. And OIH, maybe down to 200, but we'll see there. It does have lower highs now with equal lows, so you can make a case that you've got sort of like a descending triangle, right? There we go. So lower highs equal lows. So just be aware of that. Nat gas also contract rollover today. Although it tried to roll over a little bit, came off the lows. Rig count was pretty good, -4. So again, rigs continuing to decline. On the weekly overall, really just have kind of an inside candle there. Almost an inside hammer, not quite, but would prefer it a little bit higher here. Maybe like 243 would probably make it look a little bit better. But either way, came off the lows there, and I like what it's doing on the monthly as well. So not a terrible look there. And again, macro fundamentals improving there for natural gas. All right, over to the dollar index. This is acting well. If I can find I always lose my dollar chart. This is acting well. Up move. This is more like an inside hammer, inside doji to yesterday's move. Consolidates, it's going higher. That's really all. It's really that simple. For right now, it's holding up, and we'll give it the benefit of the doubt. I like the GXY, and as you guys know, I think it has bottomed. Gold here. There we go. Gold. Again, a little inside pattern. We got to bounce off the 100 moving average. Ultimately, right now, it's holding that 20-week moving average. So we'll give it some credit there. It's acting okay. Until the debt ceiling deal is done, like I said, we'll give it more of a positive bias because, a little bit of a fear trade there. I still think it needs to go to 1900 here in the short term. I'm not in love with it. I'm not doing anything with it else at the moment. Silver finally getting a nice bid. So defending that 23 handle. Ultimately, I think it needs to go down to 22, but it got a nice pop, and you know what? It held that 100 moving average there on the weekly, so we'll leave it at that for now. I'm still not doing anything with really any of the metals just yet. Platinum, just losing the 1040 on a weekly close. Not great, but I still like the monthly pattern if it consolidates. Palladium, I do like a little bit more, but I think this has a little bit more of a pattern to put in. But yeah, a little bit of a bounce today. Nothing really crazy going on. And then copper getting a bounce too. That probably wants 370. Again, I wouldn't do anything with it really until kind of that 340-ish handle, but nice little bounce there today, so we'll leave it at that. All right, Bitcoin, that actually got a bid, so up 1.3, nothing crazy, still below the 20 moving average. And again, Bitcoin is just it's just strange here. It's very temperamental, right? Sometimes it's like the leveraged NASDAQ on steroids, and then sometimes it's a fear play, and then sometimes it's nothing. And today it was like nothing, right? The NASDAQ was up over 2.5% here, and you have Bitcoin, it was up, but it wasn't doing anything, right? So this to me looks more bearish. Again, I keep saying it, but the weekly is still fine. It's still okay. Like you're above that 20, and I don't hate that doji. Actually, that looks okay for a pop. I can't rule out another pop in Bitcoin. I really can't. But if this is topped, it's probably not good for equities. So again, daily bearish, weekly is still okay until proven otherwise, and that's really all I have for Bitcoin at the moment. All right, anyways, just really quick, back up to the spiders here. So again, levels have not changed still. 422, upside trend line, possibly 425. For the triple Qs, watch that 618. That'll likely get tested next week. Unless something happens over the weekend, we have a 3-day weekend. Debt ceiling looming over everybody's heads, as you guys know. Anyways, guys, can wrap up here. You guys take care. Have a great weekend. Come find me on carnivoretrades.com. Talk to you all next week.